How many of the products in your pantry are made by companies which don't have to pay tax? Heads up, it may be more than you think. As profits earned by businesses owned by charities continue to skyrocket, critics say a centuries-old law which allows those companies to dodge income tax needs to go. It was an issue raised in the Tax Working Group's interim report, and with the group's final report due tomorrow, the government's being urged to make bold changes to bring church companies in line with the rest of the country. Our reporter Nita Blake-Persen and cameraman Nick Monroe have been looking into the issue and filed this report.
Strolling the aisles of this Auckland supermarket, it doesn't take me long to fill a shopping basket with tasty, nutritious, charity-owned snacks. From sanitarium classics like Weet-Bix and Marmite, owned by the Seventh-day Adventists, kiwi fruit and milk from the Trinity Lands Group, run by the Exclusive Brethrens, Rosé and Chardonnay from Mission Estate Wines, that's the Catholic Church, to Lisa's Dips, Naked Soups and Bean Supreme Veggie Burgers, also the Seventh-day Adventists. There's a literal smorgasbord of products which are owned by registered charities and pay no income tax on their profits, not a cent. They're up against other businesses offering very similar products which do have to pay that tax. So is that an even playing field?
Our basic tax policy in New Zealand requires organisations to meet their tax obligations. And in fact, if you look at the basis for tax policy, it talks about equity and fairness.
Standing outside a Seventh-day Adventist church in Rangiora, just outside of Christchurch, charities expert Michael Gourmet is openly critical of its tax-free status, along with other not-for-profits, charitable trusts and iwi groups. He says it gives them a clear business advantage.
And so we've got a situation that's developed in New Zealand, in my opinion, where basically any organisation can decide that it wants to be a charity and run a business and pay no income tax. But the problem is that often those activities aren't related to their charitable purposes.
Reading through page after page of financial returns from the churches, it's incredibly difficult to quantify how much money would be made from taxing them. Cash can come from op shops and sausage sizzles to hospitals and schools. But here are some numbers to consider. Businesses operated by the Seventh-day Adventists made $10.5 million in profit in its last annual return. Trinity Lands, run by the Exclusive Brethren Church, made nearly $19 million, and the Society of Mary New Zealand Companies, which owns Mission Estate Wines, made over $2 million. Last year, the total income of faith-based charities was more than $970 million, but it's very difficult to figure out how much of that was profit. So what do they do with all their cash? Charities have to prove it's going towards their charitable purpose, such as advancing religion, providing education or housing.
We are constrained with our charitable trusts and what our charitable trusts say that we can use those funds for. So I don't think there's any competitive advantage at all, because actually we're quite restrained to what we can use those funds for. And those funds are certainly not going to line anybody's pockets. They're going back to serve the charitable purposes of those organisations.
It's a busy day at Elam Church in Botany. A seniors group is meeting and the church school is in full swing. Chris Bethwaite is the National Administrator here and also the chair of the Interchurch Bureau, which represents the business interests of around 30 churches. He says the tax break is vital for the work they do.
And currently the government can't do enough or can't provide the services that are required to help communities and help people in New Zealand, and the churches across New Zealand do a lot of that work for the government. Some of them are in contract with the government and some of them just do it anyway. So yeah, you go and tax churches, it will have an impact on what the churches are able to do, but the churches will find a way and they'll keep trying to do the good that they can. But I think for the amount of money we're probably talking overall in tax, I think the benefits of not taxing churches far way out than taxing them and seeing a reducement in the services that churches can own.
But Michael Gourmet says while churches are meant to be limited to using profits for charitable purposes, measuring that can be tricky.
For example, Sanitarium, that we all know so well. If you look at their accounts, you'll find, in fact, in the last 2 years they generated $417 million in revenue from sales of their products. And from that $417 million, $82 million was applied to charitable purposes. $62 million or $63 million of that went directly to the church and disappeared into a black hole. So we have no idea what public benefit that $63 million in the last 2 years has provided.
The government's tax working group has been looking at charities as part of its wide-ranging review into New Zealand's tax setup. It received more than 300 submissions about charities. Many wanted them stripped of their tax-free status. Some said religious groups should not be considered charities because they didn't deem furthering religion to be a charitable activity. The head of Charity Services at Internal Affairs, Maria Robertson, says the charitable sector in New Zealand is highly successful, but a separate review of the Charities Act is looking at whether things could be improved.
The government has announced and is undertaking a review of the Charities Act. It's not going to look at the sort of first principles, if you like, around charitable purpose, but it is looking at the kind of the construct, the mechanisms, the facilities, to make sure that it is fit for purpose. And Minister Henare is conducting that, and he'll be taking quite a lot of advice around that.
She's adamant the process for becoming a charity is a rigorous one, despite there only being 38 staff monitoring more than 27,000 of them. There are checks in place and they must provide annual returns explaining where the cash has gone.
We want to be sure that when people are donating their hard-earned money and time, they can be assured that it's going to where they thought they would go. Now, we have 35 people doing that, between 35 and 40 people. And you're talking about a sector that has assets of over $54 billion and a turnover each year of around $16 billion. So there's also a whole lot of self-regulation that happens in there.
But Michael Gourmet says that self-regulation isn't good enough, that the current setup is a clear failure of tax policy, and he wants this government to put it right. But he often feels like the lone voice fighting against charities' tax-free status.
It's up to Kiwis and people running businesses in competition that are disadvantaged by these organisations that should be speaking out.
People are being encouraged to have their say at community meetings about the Charities Act review next month. They're taking place across the country at a range of venues, including churches, where there may or may not be Lisa's Dips and Mission Estate Chardonnay being handed out. For Checkpoint, Nita Blake-Persen.